The key chart for Bitcoin is actually not a chart of Bitcoin, but of NASDAQ, as we look at NASDAQ futures for today's video to see where things are at in the greater picture as we do close out the month of April. Just one more trading day left in this month. And as we head into May, there are a couple of very, very interesting things to be looking at, which if you are of the opinion that, these markets are correlated and are probably looking at just one massive liquidity game, then perhaps that is of interest to you. So we'll start off this one on a different note here with NASDAQ futures, symbol NQ, and you can see the same sort of correction down to that red moving average, the 5 exponential moving average, the same thing that we've seen for Bitcoin that we spoke about on a couple of videos ago. Now, in this case, we can see for the long term of NASDAQ futures, basically any time that it's been in an uptrending cycle, the red moving average, the 5 exponential, which actually let me get rid of everything else for the time being, is where those trending moves have kind of come back down to reconnect with before marching on higher. So let me just boil down that statement into like a more contrite way of saying things. When things are uptrending, we expect price to be riding that moving average and not really closing below, at all. And in this case, you can see that in the current iteration, we have seen a wick below. Yes, that's completely fine, but no closure below. And again, with just 1.5 days left in this trading month, it is a pretty good margin above that moving average, about 2% right now, which is a lot for traditional markets. But again, going back throughout the annals of history, you can see, whenever things are uptrending, not in a long-term correction, but uptrend, it does like to essentially use that as a base to launch higher. We can see all of these major rallies from here, and more recently here. So with that said, if you are bullish on traditional markets, then you would be expecting that the correction is very likely over. And I do believe that there is some good technical things in the background to maybe be of that same opinion. One of them would be, if I put on my drawing tools right here, the fact that we've seen a nice correction. Let me get rid of this for right now. We've seen a nice correction over the course of the last 2 weeks of about almost 9%. Yeah, about 9%. Does that say 31 days? Oh, sorry. Let me actually go down to the weekly right here. How long has this correction been? Since the highs were hit, about 28 days. Sorry, even more than that. Apologies. Way off there. 42 days. Okay, great. All right, now that we've gone through that, I want to bring you back to past bull markets and see like what sort of corrections have we looked at in the past? Well, in the most recent one, we did see a 35-day correction from high to low of about 8.5%. The one before that in that same cycle was an 8.25% correction over the course of 35 days. We have another one yet again right here from high to low, 13 days, about 11.5%. Another one right here, again from high to low, 14.5%, 21 days. Going back now a few years to 2019, 10% correction for this one's more like 35 days. We have another one right here, 11% correction, 42 days, actually even a little bit more than that as well. Yeah, coast to coast, about 12%. Another one right here, we do see another 14-day correction for about 12%. And we can obviously go, much further into history, but I think you get the idea. What do you know? Same thing right there as well, basically. Anyways, as of right now, we do have an 8.5% correction over the course of 42 days. I would say that that is very much in alignment with what we have seen in the past. Yeah, it's maybe a little bit on the lower end, or I guess probably actually closer to the average. But in terms of days, it is certainly on the higher end. In fact, the biggest correction that we've seen, or the longest correction that we've seen, that was not like a, like big drawdown, just a correction in an overall uptrending move throughout the past 7 years now, was 42 days. And this one is working on 42 days as well. So that would be consideration number one. The next thing is that if we get rid of this and we bring up our other indicators, we can see that there is potential for hidden bullish divergence forming between the last couple lows and presumably this low being constructed in the last couple weeks. Now, this one's unconfirmed as of right now. But in order to confirm it, what would you essentially need to see? You need to see a closure on a weekly time frame a little bit above 18,000 bucks. At that point, it would do it. But here's the thing. If you're bearish on traditional markets, this is actually the perfect area that you would be looking for on a bull trap after, price action essentially rolled on over. So it is kind of at that critical region, which is why I've been holding off on making a video like this, because before now is just, it's kind of an idea in the background. It was like a likely bounce, although we haven't really been speaking about it. But in this case here, it's at that pretty much a precise point, maybe a little bit higher towards 18,000 bucks, but very, very close to there right now, that you would be expecting for a rejection if it is going to be bearish. So we are at the point of kind of maximum financial opportunity, especially if you're bearish, just at the, at the conversion of all of these major moving averages right here, which does imply that if you are bearish, you would be expecting a rejection within the next couple of days, most likely. And you'd be expecting the next major thing to happen is that we'd see a move back down below last Friday's low, which is 17,668.25. If you see that, very likely you see a retesting of the lows right here, and that would really be the bear's chance to, push things on over. But here's the thing. Last week we had a lot of economic data that came out, more on the bearish side. And instead of dumping, it's just put in a low. I mean, it's just rallied off that low, basically. So bears had a lot of, fundamental reasons to push things further down, and they didn't, which is interesting to me. Just generally, when you see that, it's kind of a signal of the opposite likely to occur. But still, in my particular opinion, you need to see at minimum a daily closure above 18,000 for this one to really confirm that a bear trap is in. But it's certainly a possibility right here, and you're kind of at the point of maximum opportunity, especially if you are bearish, actually, where you would be expecting that rejection to come in. So, okay, we've got that. We got the average correction. We've got the hidden bullish divergence, and then also, And then also this. So I want to bring you over, not here, but here. Yes. So also the monthly stochastic oscillator is continuing to the upside deeply in the critical zone as of right now. It will remain to the upside if this one does close above 17,964. Okay. What does that mean? Well, right now it's actually trading a little bit below that. But basically, anytime that we've seen the monthly stochastic oscillator position to the upside in the critical zone, it's just been continuation all the way through. What I've marked off with the red vertical bars here, however, is when that actually crosses to the downside. And so as of right now, it technically would cross to the downside if it closed exactly right here. But still another basically 2 days left, actually, in the trading month to go, which is an eternity. And if it does actually close above that pivot, well, that'd be another thing that does suggest, hey, upwards and onwards. But even if it closes below, as you can see on the chart, most of these, almost all of these, are just relative short term on a monthly time frame. So that can be, multiple months, but short term corrections in an overall uptrend. Only one and two, only two of them. Sorry, three of them have been like major long term corrections, like a year or more. Which is very interesting to me as we're looking at data going all the way back to 2004. So zeroing in on what we're currently looking at right here, even if it does cross the downside, I'd probably just be looking at that as an opportunity for a summer correction, 2 to 3 months long, and probably picks back up again, later on this year, especially around election time, I would suspect. So it's kind of like, it's the same thing as Bitcoin, in my opinion, right now as well. It's like, okay, long term, very likely still new highs will be had. The question is, do we see this market continue more aggressively in May, or do we see this market take kind of like a summer slump and then continue on in the end of the year? In my opinion right now, I do think that continuation in May is more likely, but I will change that idea. I will be that idea will be invalidated as far as I'm concerned. Especially if you see Bitcoin below like about 60,000 or 61,000 bucks on a higher term time frame closure, or if you see NASDAQ basically below last Friday's low. If you see something like that before end of month, we're probably looking at a multi-month long correction, and that could mean Bitcoin back down to like low 50s. So going into Bitcoin's action right here, let's go over the daily and weekly. Daily still in an overall range. We haven't really seen anything. We haven't seen anything new here as CME opens back up the week. Low side of the range is 61,500. Of course, if Bitcoin does close below the median today, which is 64,000 and change, then I would be looking for a test down around there. I mean, again, these are tightening into very, very tight ranges as of right now. So it's like, I don't know how useful that is to know, but that's what I'd be looking for. If Bitcoin does close above the median, I'd be saying the same thing as before. It's like this is Bitcoin's area right here, a few $1,000 higher than the next area that I'm looking at, as trying to put in a higher low. Still, the conditions for validation for Bitcoin, similar to NASDAQ, are a little bit higher. For Bitcoin, $67,000 above there. That's where I say, hey, your next higher low is in. Get ready for an upside in May, especially if that happens before Bitcoin goes, or if Bitcoin were to go below $60,000. See that happen before, I'd be very, very confident saying that this market continues in May. You see this market probably continue to new highs throughout most of the rest of this year, and the market cycle is probably going to be over around end of year or before end of year, a little bit before end of year. If Bitcoin makes new lows below $60,000 before taking out 67 to the upside, multi-month long correction likely throughout most of summer, if not all of summer, and you see this market cycle probably continue into 2025, and we'll come back to that one later. But these are important times, again, despite being rather boring. But going back on over here into NASDAQ, there are technically more things that do suggest that this one is putting in a likely bear trap here than not, rather than a bull trap. But again, the jury's still out as long as it's below, especially about 18,050 if you want to be using a daily. And if it does come back down below Friday's low before taking out that upside number, it's going to be a bull trap. It's probably what it's going to be, or at least retest these lows over here. Personally speaking, I do think that would kind of align with a multi-month long correction. Anyways, it's probably going to do it for today. I should also cover for Bitcoin. I thought this was rather interesting. The weekly time frame, stochastic oscillator is now positioned at around 69,550, kind of similar to last week, but is now officially below the critical level right here, which, as you can see on these green vertical bars, has correlated mostly with major higher lows or around higher lows in terms of price throughout the full history of CME. Only 2 times was that not true. And the 2 times that it wasn't true, it was really not true. It was like really fucking not true. Really big problems right there. But for right now, this would still be kind of, I would say, more on the side of Bitcoin likely putting in a low above $60,000. The 2-day time frame as well is going to be pivoted at 64,800 closing tonight. So if I'd say the earliest signal that Bitcoin is going to dig in and put in a higher low right here, right, basically above $60,000, and the low is already in, is if you see today on CME specifically close above 64,800, that would fulfill yet another test of this trendline regression, which has been calling the lows basically since August of last year. So that's what I'd be looking for and mindful of right there. So today's actually a very, very important day. If we see that, I'd feel a lot more comfortable saying Bitcoin is indeed bullish. And if we don't see that, I don't think it's like it's not like a full-on bearish confirmation just yet, but it's probably leaning on more downside, to be honest. I mean, anyways, that's a good place for me to be cutting off on today's video. I do want to let you know that if you are in the Krown Quant automation, that we're going to be giving you access to a brand new indicator. It's going to be called the Trend Wave, and we're going to do kind of like a soft rollout right now. If you want access to the indicator, which you are entitled to for as long as you are subscribed to the service, email elsa.crowntrading@outlook.com. elsa.crowntrading@outlook.com. Include your trading view username and then also your receipt for the automation services. And we'll make continuous announcements about this, both here and on Discord as time goes on, and then we'll also list that indicator later on. But for right now, just for those people. So yeah, there you go. Nice little present, and probably more to come as well. Maybe. Well, yes. Anyways, okay, cool. With that said, as always, take care, much love, and fuck you, and see you tomorrow.